Fuck the what is up, man. So today we're going to be going over last week's review. So this is the journal, not the journal. This is the plan for today. We're going to go over last week's weekly review, and then we're also going to go over the weekly forecast. Today is Monday night, so Monday already happened. I didn't trade today. There wasn't any good trades in the morning, so I didn't really wake up for the morning session. I was kind of dozing in out of sleep, but I just decided, I wouldn't be trading. It was no news Monday with news later on in the week. Price was not really in any position to trade, as you can see. It was an alright trading day if you wanted to trade, but I just decided not. Also, the more important reason was because I was out late last night to like 11:30, and then I went to bed at like 1 o'clock last night. And I had practice in the morning, so I needed to get my sleep. But yeah, I'm gonna work on being better at that. That was one thing that I kind of got a little bit annoyed at myself. I think I should have woken up to at least monitor the charts. You should never, just say no to studying the charts during kill zone hours. It's just something great to do. So we're gonna do that. Then I'm gonna go over today's price action and then any potential trades that ICT students would have taken, and then just gonna go over slight education about beliefs. So let's start over here. So we're gonna go down to our weekly reviews, end of week reviews actually. We're gonna go open to this one, and we're gonna start something. So I'm actually gonna move this over just because I don't really want you guys completely seeing it. So something this week that I did well that I want to continue to do more of. So something I did well was managing my risk, because I withheld myself from a lot of trades on days that I wasn't really in the correct place to trade. I didn't do my pre-market routine. I was outside, I was lifting, I was in bed still, I was waking up sleepy, because I've structured it down to I only trade if I woke up to trade, so I didn't take the biggest trades that I could have this week, and because I would have been annoyed if I lost and I wasn't in the highest probability mindset. So if you're not in the highest, when you notice the probabilities are lower, you want to take off risk, and taking off risk is a business decision in itself. So you have to notice that me not trading last week was a business decision. Kind of ties into something that I want to work on, which is my belief about taking a losing trade, because I kind of had this belief that it's bad to take a losing trade, and it's a dangerous belief, because when you have the expectation that taking a losing trade is bad, then you also have the expectation that winning is good, which is not something you want. So, if you ask why it's not something you want, it's because you don't want emotions attached to the outcome of a trade. You want the emotions to be attached to the performance, the mind that you brought into the moment of a challenge. So this week, what is something that I could have done differently to improve my trading performance? I said I think I'm allowed and should be more confident with my trades. There's a feeling deep down, when the trade is true and according to your setup, and it's a completely no discretion, and you need to learn to take that trade. You also need to continue getting better at getting rid of those other trades, the small ones that deep down aren't your model and aren't the highest probability. It's just you trying to capitalize on guessing where the market goes. When you do that, it's pretty much just gambling. So stick to your model, take your trades, strike when the iron is hot, and then add to winning positions. What difficulty or challenge did you overcome this week? So this week, some challenge that I overcame was that I'm getting better at truly understanding and respecting the one trade. If I take a trade and the first is a loss, then I'll take another one. But if I take a trade and that one's a win, then I'm done. So last week I was noticing I would take a lot of wins, and then after I got that, I would get off. And there's still potential that you could have an even better win after that, or just as good win. But the thing is you have to be content with getting in, finishing the trade respectively, doing it all correct, and then once you're done, objectively notifying your P&L, how if you did good, and just getting out. You don't need to always be trading. You also you don't want to be taking those small trades. Oh yeah, I took 10 trades. 10 ticks each. No, you want to be getting a couple hundred ticks. Also, now since I typed that, defining winning and losing, because this is an idea that I've been developing and expanding over for the past month, but now I understand that winning is not the P&L at the end of the day, but it is if you can say you followed all of your rules and were a student of a game. That is a win. A win can be P&L negative, P&L positive. A loss can be P&L negative or P&L positive. The P&L does not directly correlate to if the day was a win or not. Okay, so we're done with that. We're going to go to the new week's review. So I'm going to go, instead of here, we're going to go down to the forecast. We're going to open up the forecast. I'm going to show you what I thought about this week. So from Wednesday morning to Thursday, there was only bullish 4-hour candles with high volatility. I see price filling imbalances and OTE before moving price. So, we got this. This is a big range move, and we're going to want to see, I think, at least tap back down into the bottom here. So from here, I'm expecting us to see a tap back into this new week opening gap, inverse fair value gap, and then probably move lower. Hard to pick. I'm going to say bullish because we're at all-time high, and obviously that's clear bullish price action. Price just swept the all-time high and is moved slightly lower, and I do see price in this week moving to the OTE at least of the range. But it could reverse on the end of the week, which liquidity pool was swept last, all-time high was swept, looking for a reaction. The move that swept the all-time high was formed after sweeping last Friday's low. OTE of the current trading range are lower before moving higher. So tomorrow, no news. And then Wednesday, which is the day that I'm usually home, I won't really be trading, but I'm going to wake up and I'm going to be on the charts just because after 6:10, but there's still that 11 a.m. FOMC meeting minutes, so I'm just going to be watching pretty much, and then maybe after 11 I'll take a trade. And Thursday, no trading. Friday I'll trade. And then that's kind of my prediction, get back down to OT and then start to move a little bit higher. So that's that for the day. We're going to hop on the 1 minute, and I'm going to hop on the 5 minute, and I'll just go over any trades that I saw today. So I'm going to mark out, just market open. So we get that market open, we take out, this is kind of like my first time really analyzing this today. So we take out the lows here, we sweep that as we're kind of tapping back into the equilibrium of this range. We get that probably on the 3 minute, there's this fair value gap. It's obvious, just one fair value gap right here. And we have a high right here, and you could have purchased. It would have closed below, but it would have been a finished model because, as you can tell, that this high was, it's this high. But as you can see, the thing you're looking here, you want to believe that it is this high, right? But the thing is that we take it on the range that formed the fair value gap, no matter how small the range is. You can see here we have a new swing high formed, so it is actually right here, and as you can see, that is swept and does not show displacement above. It shows so you could have taken, obviously it would have, this is the close above, but I probably would have been taking it on the order block because that is just a clean reaction, and you're going to put it stop below, and your target's going to be right here. So it's an okay trade, not a bad trade, probably better on the lower time frame. There is probably a better setup. So I don't know why I'm really looking on the 3 minute chart right there. I don't know what that's from. So, as we're taking out this high, you're looking for displacement underneath or below it, and you don't really get that. There wasn't many really good inverse down here. I would have liked, because this was SMT right here. This right here was SMT with ES, so you would have been very bullish right here. And then price comes back in after sweeping that low right here, and you're looking for the first fair value gap, and you're taking that entry. So this would have been ICT's Sun model, but so these are per equal lows, so that would have been a good target for a short later on. So we got the SMT, and then we're looking for an inverse. So the only fair value gap, it's not really that good, but you could inverse this one. It inversed it, closed back below, so you'd probably want to take one like right here. there's no really good inverse model. You know, we take out this high then next, and then we do inverse this, but then we just shoot back here. And you're just watching, see, yeah, today wasn't that clean of price, and that just makes me even, you know, just a little bit more content with not really taking a trade. You know, there was this trade that, because once price took out this, then you could have taken a short right here. Some might have entered in a little bit earlier, but the thing with that you want to focus on is just that, let's wait for some SMT or something right here. So we take out this high on top of that, which just shows the conviction, and then we don't show any displacement above that high. Inverse is fair value, yet change in state of delivery or order block right here, because technically this right there is the change in state of delivery right here. So you're tapping back into that change in state of delivery with an order block, and we just go lower. So that is technically a good trade, mechanically, not technically. So yeah, that's kind of it for the day, and then price started to go lower. Not really interested in this. Yeah, I'm not really interested in that. So now I'm gonna go over kind of what I've been just kind of pondering, thinking about, and it's something really good if there's, you know, just one person watching this, which it probably isn't. But it's the belief about winning, and I just did this on my analyzing beliefs worksheet. So it kind of ties into, you know, getting down to the core aspects of a belief, and then and really seeing if they're built upon logic, and if they're not, then we're trying to get rid of them. So this is what this thing do. I got it out of Randy Howell, a trading psychologist's work, who I extensively study. So what is the thought saying? I don't like getting stopped out of a trade, and I kind of get annoyed when I get stopped out. So I don't like taking losses that I should be taking, because I don't want to be annoyed after a loss. It's an emotional pattern that I'm forming by not taking trades. I'm forming by not taking trades. I'm telling my brain that the way to escape. So basically, sometimes I don't take trades, and by not taking that trade, your brain has just successfully completed a pattern, because it notices the risk, and the risk puts your brain into a fight or flight, because our brains want to seek comfort, and they want to solve problems, seek comfort, and be in situations that don't have uncertainty. The brain hates uncertainty, and trading is all about uncertainty and probabilities. So by not taking trades, I'm not even exposing myself to the uncertainty, so my mind has helped itself, because at a second I was going to expose myself to the uncertainty of risk of a live position, but then my brain convinced me not to, because I'm thinking to myself that is my brain wants me, my emotional brain does that to me, because it wants to keep me safe. It thinks it wants to keep me safe, but the thing is that is not keeping me safe. So what emotion is attached to the thought? Remember, all thinking is emotional state dependent. So escaping uncertainty, taking risk off the table. You know, when I get stopped out, I get slightly annoyed and aggravated. The mind is coming to the conclusion that getting stopped out is a bad thing, when in reality it's not, because that's just the outcome of probability. So this is because the mind has entered a fight or flight state, since we're engaging with certainty, the mind's worst fear. You have to train the mind not to be scared or annoyed of getting stopped out, that it is not a loss if you followed your rules. So now we're looking to the evidence that supports the assessment. So this is the assessment. So there is no evidence that supports the idea that getting stopped out of a trade is something to be annoyed or even fear. Technically, thinking over, there is 98% fail at trading, so that is clear evidence. But the evidence on my side that getting stopped out of a trade is the fact that I have a mechanical pattern, or not a pattern, dumbass, mechanical setup that produces 80% higher win rate. Back-tested data. So when you notice that, then there's little evidence that is proving against your idea that getting stopped out is bad. When you have that win rate and you're getting stopped out, yes, the win rate's lower because you're a beginning trader, developing trader. It's at 50. If it's 50%, you don't need to be feared of getting stopped out, because when you win, you're going to make more money than when you lose, and you will in the end be profitable. So getting stopped out is not a bad thing. Getting stopped out is only a bad thing if you are consistently losing money, if it does something bad to you in the end of your journey. But getting stopped out with a mechanical strategy that is back-tested data above an 80% win rate, you're good. If you should only be annoyed if you notice you are not following your plan and falling out of line. That is completely true. If you are still doing these things and enter a position you see that is within your model but get stopped out, that's fine. That is fine. It ties back into not trading for the outcome but trading for the next 1,000 trades. You want to have a large sample size. So yeah, if you are scared of getting stopped out, then that means you care about the outcome of that next trade. That therefore means you don't care about probabilities, because if you truly believe in the probabilities, then you don't care about the outcome of the next trade. What you care about is the outcome of the next 100 trades, the next 1,000 trades, because you know that over time your mechanical strategy with back-tested data will prove profitable. So that's very important to think of. Is it true as a fact, or is it only an assessment that may not be grounded in evidence? The belief is not true in fact. Me getting annoyed or aggravated shows that there's an emotional attachment towards getting stopped out or towards hitting TP. That emotional attachment is obviously the seek for power and money, obviously. That is the thought of money, yeah. So when you get stopped out, you think you are losing money, which you are in that one trade, but you're not over the collective sample size. You have to understand that the outcome of any one trade doesn't matter. It's over the large sample size. Because you can't truly believe in probabilities if you don't believe this. This is probability mindset based right here. Is the thought saying is the thought trying to help you or hinder your progress as a trader? The thought is trying to hinder my progress as a trader. It makes me not enter some positions that I should be, and escaping uncertainty sometimes by not even engaging in the market or risk at all on days that I should be. That is clear. On days that you shouldn't be engaging in risk and you don't engage in risk, good job. There is no reason to have and choose to have a belief that is hindering the progress that you work so hard for. You must kill this belief. What happens to the voice of the thought as you unfuse it and examine with it? It starts to click for me that getting stopped out or hitting take profit are simply just outcomes. And we always have been taught that the outcome is just the gift. What you have to focus on is the process, the internal things that you do. You cannot ever have the control of outcome in trading. You remember that. You have to submit yourself. You will never have control of the outcome in trading. And if you're getting emotional about the outcome, then that's kind of a problem. You can only put the probabilities in your favor. To be a great trader, you have to have control over what you can control. You can only control yourself. So you must focus on the mind, because the mind is you. You are the mind. You bring into the moment of a challenge, because the challenge is when the mind gets tested. So getting stopped out of a trade is not a bad thing nor a good thing. If you truly believe in the probabilities, it is just one side of two potential outcomes. You have simply landed on the wrong side of probability. And luckily, you are not judging yourself based on your last trade, but your last couple hundred trades. So you will realize over time that you will win, and the wins will be better than the losses. But that also ties into when you win, you can't be too emotional, because that is just the probability. And then I did this whole fucking thing, which some might see extensive, but I don't know if I'll really go over this, but it's personal beliefs regarding winning and losing. So I have a set of beliefs that are formed to learn more about myself, and my implicit beliefs, the beliefs that, have been formed into me over time, but I sometimes don't really see, and they're just there. So it goes, tell me about a significant experience from your childhood or personal life where you faced a challenge or a setback. How'd you handle it? And do you see any parallels between the experience and how you approach losses in trading today? And then it gives a reason. This question aims to uncover early life experiences that may have shaped your emotional responses to setbacks and how these patterns may manifest in your trading behavior. So I said, I'll just do this one. When I think about losses that I took when I was younger, there are a couple that come up. Once my swimming goggles fell off during my championship race. I remember crying after. Not out of anger or sadness, but just crying. I remember during the moment I could not react to the fact my goggles fell off. I could only keep doing what I knew, which was swimming forward. I took a good amount of losses in my early childhood because I was never the one winning things. I was always, coming short of things. I kind of got used to trying my hardest, understanding that after, I can't change my performance. Then I can only go back to the drawing board. I see a direct parallel with that example towards trading. If you notice yourself messing up or breaking a rule, you can't change the fact that it happened. Not if you notice yourself, but if you did that. If you broke a rule and you lost, you can't change the fact that it happened. But what you can change is your reactions, what you do after it. You want to continue doing what you're doing, analyze what you were doing, and work hard, trusting your plan and your process, especially your process, back-tested process, obviously. Looking back, I remember that during some of these losses, I would tend to feel sorry for myself. I think feeling sorry for yourself is a disease, but during that time my mind thought it was okay and it was the best way to act. I'll do a couple more. I mean, it's kind of fun, and it not only it makes reading over it helps me a lot, kind of just understand it too. So reflect on a recent winning streak in your trading. How did you feel during that period? Did these positive emotions or trigger any specific memories or associations from your past, such as previous successes or moments of recognition? This question explores the positive emotions associated with winning and seeks to understand it, like any connections between recent successes in trading and past experiences that may have influenced, your personal emotional responses. So I said, during previous winning streaks, I would sort of feel like the man. Like my opinion and knowledge became more valuable after winning, like my ideas. I would live the rest of day in a good mood. I think my mind from swimming is very used to doing work in the morning, taking the win or the loss, accepting it, and then relaxing after, and then getting back to the drawing board later. This may be good transferring over to trading because it's kind of the same routine, but you have to make sure that winning does not activate any beliefs that say you are more worthy or that you are more successful, because success is not money. Success is the trials and tribulations that you get from making money. You have to remember that winning a trade is just an outcome, and we don't care about outcomes really with trading. We care about processes. So you're able to feel worthy, successful, and have a good day when you follow your plan and learn from the markets. When I was younger and would win, whether it be a swim race or a board game, I would kind of get the feeling of, wow, I guess maybe I am good at this. I would kind of let winning be a confirming factor if I did good or not, which in a way it is. But it was only when I won, because when I lost, I wouldn't take it personally. But when I won, I would take it personally. I think this may be because I was exposed to failure, especially with the toxicity of swimming, and not exposed to winning as much. Although I did win many races in my life, and I kind of won them humbly. But I'm kind of speaking on the bigger races, like sectionals, futures, states, those sort of things. I had to take away emotions attached to swimming. Understand that now with this mind, that when I win, it doesn't confirm or deny any personal attributes about myself. That when I win, P&L wise. This is important because if you keep on disrespecting your rules and don't want to come to the market and learn, which is the basis of if you have a win or a loss, then yeah, beat yourself up because you're doing the wrong thing. And if you're doing the wrong thing and you're this far into trading, maybe it's not for you. So it doesn't confirm or deny any personal attributes that you are developing. It's simply you landing on the right side of probability. Humans attach emotions to winning or losing. By itself, they have no meaning or any value. Okay, I'm going to go till 25 minutes. This is a lot of fun. Let's see. Actually, okay, these ones are kind of short. All right, we'll go over them all. Think about a specific instance when you faced a significant loss in your trading journey. What emotions did you experience at that moment, and do these emotions resonate with any past experience of disappointment or failure in your life? So this question delves into the emotions tied to losing and seeks to uncover any underlying connections between trading losses and the past experiences of disappointment or failure. I remember a couple of times when I took a chunky loss and lost my funded evaluation account, I would be scrunched over, breathing short and heavy, muscles tense as possible, and trading my heart out. I remember that in that moment I could not stop, no matter how wrong I knew it was, or how much I knew that I was just there to trade, which is such a bad belief to have. When I took the final loss and I couldn't trade anymore due to account liquidation, I'd feel a sharp rush of heat through my body, a wave of all negative emotions. And then I'd remind myself, it's over. You fucked up. Now you can't be mad. Nor can you be sorry for yourself because there was only one person that did it to you. You. The market didn't take your money. You put your money in so the market could take it. You can only recover from this and work hard to analyze and recover from the loss. I would take some time away from the charts and do something like workout. From there, I'd come back with a clear mind and analyze the loss. The emotions from those losses do not line up with the emotions from past losses. That is good. It means that you or your feeling attached to losing does not add up. Consider the role of self-worth in your trading experience. How much does your perception of yourself fluctuate based on your trading performance? Can you recall any instances from your past outside of trading where your self-esteem was closely tied to success or failure? This question explores the connection between self-worth and trading outcomes, aiming to uncover whether your self-esteem is heavily influenced by success or failure in trading, and if there are historical roots for this association. In the past, there haven't been many times when I would lose and I'd let that affect my self-esteem. From what I can remember, I was pretty good with taking losses, whether it be from swimming, school, friends, or other things. I sort of just accepted it after a certain number of times that losing happens to everyone. I learned through swimming that after taking a loss, it happened. You can't get too mad. What happened happened. It is done. The only thing you have control over is yourself. So I'd focus on accepting the fact, and not staying caught over it, because I would see a lot of my swim friends be really mad about these losses, and they would take it for days. They would not accept it. It would be really detrimental to their swimming. So I'd continue to work hard, and I think it has transitioned over to swimming, into trading. From where I would take a loss, I understand that it happened and I can't do anything about it. From there, I would see where I could improve and then work harder. My perception of myself does not fluctuate based on the outcome of any one trade. This has formed over it being drilled in my mind by my mentors, and especially starting with in such a I started trading with a weird way. I didn't really want to do anything. Okay, I could go over that for so long. But basically, I started trading in the bad retail mindset. Stopped trading, got reminded of trading, got back into it. TGR's bootcamp, best fucking thing if you're shitty. And then I just started teaching myself all of the good parts. I brainwashed myself with a fucking clean slate of all things, like all the good trading aspects. So consider the role. Okay, no. Reflect on your reactions to winning and losing in trading. Are there moments when the emotional impact seems disproportionate to the actual outcome? Can you recall similar instances from your personal life where emotions did not align with the situation at hand? This question addresses the potential for emotional overreactions and seems to understand whether there are patterns of emotional responses in your trading that may be influenced by past experiences unrelated to the market. So there have been some times when I recall that emotional impact was greater from the true situation. Most of these, from what I can recall, have been when the outcome did not match the prediction of the outcome, and it would set me on fire internally and kind of have these negative emotions. I remember once on Christmas Day, I did not feel like I got the attention from my family and nor the gifts that I wanted, which is a selfish thing, thinking back, but in the moment, that selfishness, which is just a thought, could not be formed because the emotional brain had complete control over my body. I was sad the rest of the day, but it was because I expected something to be really cool. Oh, no, not but this is another one. So when I expected something to be really good and it was just pretty good, I'd be bummed out regarding the fact that the thing is still good. It ties into managing expectations, because expectations will control the reaction to the outcome, because the expectation happens before the outcome. If you were expecting to get stopped out of a trade, then you'll be filled with euphoria and can't even control yourself when you win a trade and close it right away. In trading, I have learned about managing my expectations. It will allow for more consistent long-term success. Expectations are nothing but a belief about something that will happen in the future. But when you start to tie like the negative emotions and positive emotions to them, then trading is going to be a harder journey. Focus on not having much expectations, just trying to be the best trader you can be. That's some real shit. I'm going to tie the video up right here. It's a long video, probably not long this video now. But I just feel good, And we'll also say this, I became a Christian. I repented and gave my life to Jesus Christ on 2/22/24. So, yeah. Bless up, guys.